Welcome to Cycles TV. This session of the Market Cycles Report is intended exclusively to provide information and education to help individuals better understand cycles and the markets. However, this information is not to be construed as professional advice as to the buying and selling of securities. In no event does the host express any opinion with respect to, or make recommendations regarding, the purchase or sale of any particular investment instrument. There is a very high degree of risk involved in trading. Buying or selling decisions are solely within the personal discretion of each individual. And now, enjoy the show. Here is your host.
Welcome to the Foundation for the Study of Cycles. My name is Lars von Thienen. I'm your host today, and every week, Monday, same time, same place. We meet here, Cycles TV. Let's discuss some cycles. Today, as announced, and we discussed it last week, let's have a look at the crypto market and in specific Bitcoin. So we've not reviewed this asset class for a while, so that's the place to be for today. I will keep it only on Bitcoin as I think this is the main currency, and I need to do some announcement and comments on this asset class if we do some cycle analysis in specific here. For the global markets, I think markets are closed today anyhow, so I think please review the last two sessions. I have focused on global markets, long-term, short-term. It's a very clear picture in regards to cycles on the global US markets in specific. Please move back to the last week's sessions. Today, crypto. So if we analyze crypto, we need to understand that Bitcoin and crypto in specific is a very young asset class. So we don't have as much history as in the stock markets in general. Second, and that's my observation during the last 1 or 2 years now, monitoring different cycles in the crypto assets. While 5 years ago there was mainly Bitcoin and this coin in specific, where all sentiment, hopes, fears around this crypto class was concentrated on. During the last 5 years, they have evolved a lot of coins in parallel to this asset class, which are very hard to judge from their volume, from their focus groups, from their target groups, from their meaning in the financial markets. So it gets very diluted. And my second observation is that we have a lot of marketing political noise on this asset class also during the last years, which makes it harder and harder to apply cycle analysis. In technical terms, we would call this the noise to signal ratio gets too high. So there's more and more noise coming into these markets, so more and more coins now diluting where the focus is, more and more marketing, political interest, maybe more financial tuning behind the scenes for just short-term profits, which is going on in this class, which is noise. It's pure noise, which is more overlaying the natural cycles or the real cycles, which are more fundamental and which will make it harder and harder for any digital signal processing to detect these cycles. So the noise to signal to noise ratio or noise to signal ratio, depends on how you judge it, has not become better in this asset class. We need to understand that we are using digital signal processing, and this is an important factor if we move into a specific data series asset class, that we are aware of what the movement in these markets, the volume, the noise to signal ratio might be. But just upfront some comments. Let's jump into this data set now. So let's start with with a basic daily chart here in Bitcoin versus the US dollar, which we see here. I pulled up first a long-term chart going back into the year of 2017, and let's review the last month's first in regards to these cycles. So we have more data, and I will update this to the current point in time. So we are here September 5th for today. And the major peak has been here in December 2021 here. So I will ignore this downturn for a second. I will update this to the current point in time during the next 10 minutes now together with you. So let's highlight a little bit what happened afterwards here. And let's start with these long-term situation. When you have analyzed this kind of long-term data sets, we are all aware that Bitcoin worked in these not cyclic movements. It's the exponential moves which always have made crypto or Bitcoin these specific moves. So we always saw these parabolic moves at the peaking times in Bitcoin, and then afterwards a consolidation phase. So parabolic moves are in specific not easy in regards to cyclic behavior. So it's not cycling. We always have a repetition of these parabolic moves in this asset class, which is, I would say, not a perfect cyclic behavior we see in its markets. However, there are some cyclic signatures in these markets, which helps us to identify when these situations or these parabolic or hyperbolic moves, which you call it, might be around the corner. This was the basic, which I did, I think, a year ago on the crypto assets to have an idea on that. So we see here the last parabolic move started in the year of 2020 here, then the consolidation and the peak upwards. So this situation, if you look at the spectrum at this point in time, so let's open the spectrum. This is the spectrum for this long-term data series. And I've talked a lot of times around the peak here, around 200 days in Bitcoin. This is a very prominent cycle. You always see 200 nominal 200 days, 180, 200, 2020, before major moves in Bitcoin occurred, at least if you research all past parabolic moves in Bitcoin. So this is a basic pattern here, which we also saw at this point in time. We discussed it here on the channel, but however, since then, at least this pattern has not been seen again. So we cannot talk about the next parabolic move around the corner. So the situation last year and also beginning this year was then the question, okay, what's the next cyclic behavior in Bitcoin? And then we have seen that these longer term cycles, so a length of 230 in the spectrum or 289, which you can see in this long-term analysis, have shown up in Bitcoin. And there are some things we need to be aware when we see this kind of spectrum chart. And I think besides talking about Bitcoin and the current cycles, this is the kind of learning or education I want to point out, because I think that's important talking about this spectrum here. Because let's mark some important situations here. What we're looking for in a spectrum is always a clear separation of peaks. So we have, let's say, here's a peak, here's a peak, and here's a peak. And maybe this would be the largest one here, but we have one situation in this spectrum here, which makes it not easy for these three ones to differentiate which is the most dominant cycle to use. And this is a flat situation. We don't see this clear peak going down and then coming up. So the clear peaks in the spectrum here, this would be the kind of ideal situation or theoretical ideal situation. But it's becoming more and more flat here between these peaks. So we don't have a really, clear separation here. So that's what first is a first indication that this spectrum we are seeing here, so at this point in time, here and here, is becoming flatter and flatter. So you see here, here we have the clear separation between the peaks. Yeah, you see it here, yeah, and even in the shorter term cycles. So this makes the separation, or at least the spectrum view, not easy, because yeah, there could even be something between the lines here and here. So this is becoming more and more a very flat plateau in the spectrum. And if you move down now our analysis start and end point, so the in-sample period we are using here, you will see that this happens now if we move forward. So this was a very long-term analysis, so a very long time frame, which I've thrown into our digital signal processing. And you see the first is, I don't like these peaks here. They are not as clear as you want them to see. And this is what you need to be aware of, because this is what you can't see in this table here on the right hand side. So you know that in our cycle scanner, you will see the list of peaks here, or I can even hover over these 3 peaks here. So they will be on top of this list here, right? So it's the second most dominant peak here, just going into the list on the upper right in this spectrum. But the table view does not tell you the full story of the spectrum and how to read it. And that's why I wanted to bring up this example here of reading the spectrum chart in specific. So the separation of peaks in this spectrum is what you always should to take into account first. And that's not as beautiful as you would like to see it from a cycle analyst point of view. And it's, for example, in the global markets, the spectrum I showed you during the last 2 weeks, they are much more clear in regards to which cycles to select and which cycles not to select. So that's the first point, which makes it not so easy. So you can say you can switch between all 3. Or you can build a composite out of all 3 cycles, which are here very prominent in the peak, and I will do this in a second with you. However, as discussed, it's more becoming a flattening plateau here, which might then, it could be any long-term cycle between 200 and 300 something. So the daily chart might not be useful to detect the longer-term cycle active here. So now we could argue, let's then switch to the weekly data sets. And yeah, let's do it. Let's go to the weekly data series here, which is also here. So this is a weekly Bitcoin chart here, now up to today. Coming from 2000, I think 14. I mean, we might have 2 or 3 years more on this data set, but that's what I said initially. We don't have enough history that we can pull up long-term historical data on Bitcoin on a weekly chart to do some cycle analysis. So this data series here we see on the weekly Bitcoin chart going back to 2014 is not enough. We don't have enough data points here to trust digital signal processing. So we have around 400 data points. So the maximum cycle length we could use here in that case might just be around divided by 3. So let's say no cycle longer than 100 could be trusted here. And if we look at the spectrum here from this weekly chart here, that's how the spectrum looks like on the weekly data series. And you see what I tried to explain on the daily spectrum now. If you look for cycles above a length of 100 weeks here in this case, we're talking about 100 weeks, it's just a flat plateau in the spectrum. Yeah, I think it's all clear what you see here. So here, there's nothing we could use. Okay, you might argue, okay, here might be a peak, but at least the separation, it's becoming too flat here. I mean, this separation is okay, but then to the right-hand side, it's not really clear if it's the peak at this point here. Here's also another small peak here. And this should, if there would a peak, I would have seen this separation here in the spectrum, which we don't have. So that's the same story here. So it looks like on the daily series, we have 3 peaks in the spectrum, but we should not trust it blindly because the separation of these peaks is not really helpful. And if you switch to the weekly data series, we don't have enough history to do a long-term analysis. And if we just throw in what we have, the weekly spectrum does not look good. I mean, there's just one peak here at this point in time, which has a length of, let's check here the length. This is cycle length of 41 weeks. Yeah, we could use, that's the only cycle which might be of any clue here on the weekly data set. And for sure, let's pull it up. So let's bring this cycle here on the chart. So this is the 41 week cycle, which is the only one I would use in the spectrum from the weekly series, which is in alignment with the key turns here we saw in the year of 2021. But then, and this is what we observed since April this year, so at a long-term midpoint here, this cycle has become out of sync. So at least at this point here, so this low point here, this short-term cycle, I mean, it suggests, yeah, this is a bottoming signal here. But as said, we do have not enough historical data to validate the cycle for the Bartle score statistical significance. So we can even not trust the Bartle score here, which is shown, and it's out of sync. So the weekly spectrum, weekly cycle does not give us any information we could use for timing. So therefore, let's switch back now to the daily chart here. So if we have a look at the daily chart, and we are talking about the past year, so we need to update to the current situation. So I try to explain you how to read these 3 peaks here. However, let's have a look. So and the only cycle I would have used at this given point in time, I mean, we are now going back into the history, which is always easy, but it's important to learn something from past behavior here. This 200 days nominal cycle has been aware to us for years, and we have discussed this cycle here. This cycle has been really helpful in detecting the top in 2021, the low, and this top here, and this is what we discussed here on the channel. And then we have been waiting for a cycle low in January this year, and this is what I then also talked about in the financial summit we did here. I think it was February somewhere, where I showed you this cycle again, and we have been expecting a low to show up in Bitcoin. So this is what we discussed in February here. I mean, the low, more or less from, cycles are here to discuss timing, not absolute price movements here. So I think the low was quite on time in regards to a relative low at this point in time in the markets. Then we expected the up move here into, early summer this year, and which you could argue now after the fact might look okay, but it was really not easy from a timing perspective to identify this point in time here. However, this is the only valid cycle at this given point in time. So we're talking about what this projection was made at this given point in time here. So this projection, which I'm showing here, is based on data from October 2021. So the 200-day cycle still looks valid in regards to relative turning points in this asset class, coming from past behavior. So this is what I also introduced. So I mean, we have not known, but this was a very small low compared to the price movement which took place afterwards here in this range, and then the down move was even larger than the up move here in addition. So this 200-day cycle did not help us to identify another parabolic up move in this data series. So from a long-term perspective, it looks like Bitcoin is still in this not downtrend, but consolidation phase here. That's what I said. There might be more noise around it, dilution in the crypto class, political discussions, which might be more important now than this 200-day cycle, which might be explain the situation, at least while cycles here. But from this 200-day cycle, from the October last year point of view, the situation. So if you want to bring in, but let's clear it up first. So if we want to bring in the other 3 cycles here, so that's just the 197-day cycle. So we can now build a composite model by adding the 2nd cycle here and the 3rd cycle, which give us this composite cycle model here looking into the future. As said, take these 3 cycles very carefully. So this is really more scientific usage, not really for doing some market projections here. But let's look at the past behavior of this data series first. So here we are now overlaying this long-term daily cycles model on the overall chart. And as I told you, this is relative price movements. And we're talking about the turning points here, not price targets here. So if you zoom in a little bit more, so this is the period 2017 to 2020, you see that from the timing perspective, just to outline the timing here, so from the just connecting where the theoretical turning points in time and the price turning points happen, yeah? So just looking at these points in time here and then connecting with the price series, you see this composite model seems to be nicely in sync with the main turning points here. So let's also scroll forward in time here. So then also scroll into this. Let's start with 2020. I mean, you need to see it here. I mean, even this smaller cycles, it gets more clearer if you do this zoom in and zoom out, yeah, to find exactly these relative turning points here and connect them, yeah, at these given points here. You see that even in this smaller, now I mean, this is a 100% move here from 10,000 to down to 5,000. So it was a big move. It just looks like a small move on the chart here, and then coming down here, let's zoom in again here. So I need to clear it up. So and then this, then we had here more the sideways, and then the large up move here. Oops. Into the very, very strong cycles here. So even though while I did not like the spectrum, it seems I like the composite model, which is based on these 3 cycles here, at least still just using data back to October last year. But then we see here combining these 3 cycles since this point in time here, or since the point we did the forecast in October 2021, the only reading was here should be a high at the given point of the analysis, but this would be hard to read. Yeah, I mean, this low here, top here, low here, these are no clear changes in the composite here. The only reading could be here, the top in the composite model here for November, October this year. But to be honest, this is another education what is important. Never look more into the future than the next 1 or 2 turning points. 1, 2, 3, 4. So even though the composite looks like good at this point in time, this is too far away in the future. So this composite model projecting 1 year into the future without updating the model in between, never do this kind of projection and then follow this. So even though this, there was no real conclusion. So that's what makes cycle analysis also not always as beautiful as we like it to be. So it's easy to tell the story now from an historical point of view. I try to explain you, you could use these cycles. And as I said, I like the composite model out of it from the historical correlation, but it would anyhow not have given us very useful information since October last year. And I tried also to explain you how we can read this from the spectrum. Okay, so that's always important. Never just blindly look at the spectrum, the table, choose the cycles, which is on top, make your projection. You always need to understand how the visual spectrum needs to be interpreted, needs to be read, and gives you kind of how valid a cycle model might be or might not be. So let's now update this analysis to today. So take all data into account. Let's clear the analysis. So now we use all data. We have now too much data for this analysis. That's also what I often try to tell you. As we have updated now more data, I would set the starting point more to a more current point in time, to not always include too much data here. But anyhow, let's start with the current situation. Okay, so let's start with the interpretation first of this spectrum here. So that's the spectrum now today. So that's how the cycle spectrum looks like, taking into account the more data points. First of all, we see there's no big change in these 3 peaks here in the spectrum. So since 1 year, or since October last year, adding now 7 months of additional data in this market, there's no big change in the spectrum for Bitcoin. So we don't get any new clue. There's no separation of a specific cycle which could be used while adding 6 to 7 months of, or I think even 11 months of additional data since October last year. The spectrum does not really change here, right? So that's also, I think, important to understand that you need to know the rhythm of a specific market. So you need to know how the cycles have looked in the past, how the cycles changed during the past, which cycles have been valid, which not, if there's a change in the spectrum not. So this gives you an understanding about the rhythm of the underlying cycles of a specific market. And here, at least what digital signal processing can help us in detecting, there's no new reading, there's no new outcome, even if we add more data. And so the same reading occurs here. How to read the peaks in the spectrum. We need to be careful with these peaks here, even though this is a peak. Yeah, the separation would look better if it would look like this in the spectrum. Yeah. So let's be careful with this interpretation here, because these 2 cycles are very flat. They are not clearly separated. This is looking a little bit better here, to be honest. So this cycle seems to separate now more from the other 2 cycles here. So this seems to become more interesting here than these 2. However, we know from the historical pattern that the nominal 200-day cycle always played an important role in the rhythm of Bitcoin. So, but looking at the spectrum for over a year now, there seems to be a fundamental change in main rhythm, in the dominant cycle, which is driving crypto assets. We don't know yet if there will form a dominant cycle again, or if there will be just a mix of different cycles, which makes it then even harder just to use cycles for timing. But at least that's the current situation to be aware of. And cycles are not always as clear as we like them to be as clear. So let's start with this one here, and then I would add this as a second cycle to the mix. I would then ignore this one here. You see even from the red triangle, which shows us on the daily cycles, the Bartle score is very low, so therefore the red triangle here. So the cycles we could use for a model is this one here, cycle number 1, and this one here, cycle number 2. And now let's use these two cycles and look how this will then read in the spectrum. So let's activate the long cycle here, the 290 days. This is a 290-day cycle, which looks like this then here if we bring this onto our chart. So first, always the historical perspective here. As said, keep an eye on the relative timing, not the absolute price swings here. Yeah, so but similar to what we did already. So we showed you that these 3 cycles helped in timing of the past, but not the past 6 months. So from a long-term historical view, these 3 or 2 cycles have been useful, but the combination out of both cycles not for the last 6 months here. So there's no change in the long-term picture here. You see it's very nicely aligned with the long-term chart. And now this is just reading the cyclic low, which from this 290-day cycle seems to be somewhere here, but still, as we've seen here, we should be in a prominent upswing. Just reading this cycle here, I will make this more clear in the spectrum. Just a second. Whoops, here we... okay. No, now the model is gone. Give me a second. I think I need to update. Yeah, I need to refresh with the analysis. I think we started with the long-term. Here are the 3 cycles again. Okay. So let's use this one here. That's what I wanted to highlight here. So since somewhere this point here, I mean the low might be good, but for this period here, it's a strong upcycle movement here. Bitcoin is just moving sideways. So we could argue. Again, we could argue it proved perfect in the past, but as said, since September, or since this top here, these cycles do not help us anyhow in predicting turns here. One interpretation, but that's just one interpretation now, and that's now as these cycles are not really useful right now. We could argue another downswing might follow once we go beyond October this year, and this upswing just stopped the downtrend. This would then more confirm that we are in a longer term downtrend, but that's now really interpretation, and I don't want to go too much into the interpretation here. So no valid information just using this cycle here. That's the short reading. So now let's add the second cycle from the spectrum to the mix. So we just use this long-term cycle here. As explained, let's now use the nominal 200-day cycle, and let's add this as a composite model to the chart. So I've now added this cycle into our composite model. That's now the reading using these 2 cycles from the spectrum to build a composite. I explained you upfront why I would use these 2 cycles. Again, as we would expect from the historical point of view, this looks like a very good historical fit. If you scroll through the historical and if you zoom into the tops and bottoms, doesn't matter which period you look for. So the historical alignment correlation of the cycle timing for the relative tops and bottoms is very good, and that's the best model I can present today. So that's where I want to finalize or finish also the Bitcoin cycle analysis. That's the best model we can get today. At least updated, we use the 200-day nominal cycle, which is very important from my point of view, because we can prove that during the last moves in Bitcoin, this cycle was always important. And now adding a longer term cycle as a second dominant cycle into the mix, I tried to explain from the spectrum perspective why I choose this one and why I did not choose this one here in the middle. So it seems the 200-day cycle is still valid, it's still there. And this is now a longer term cycle, which is coming at least similar prominent. However, we have the situation, this is not a perfect spectrum here, but at least that's the best usage of this spectrum, and this would make up this chart here. So the low we expected in January, February, you can see it again on this two dominant cycle forecast here, yeah, which worked out. I mean, very flat here, and then the longer term cycle then was more important to force another downswing here until this point in time here. So, and even though we have an interim bottom, I mean, we did not see Bitcoin moving up from this point here. We see now a sideways movement here. So it would be interesting now to observe from now into the October period. Maybe we see another small upward push. So we need to analyze the technical situation now more importantly than just cycles. But using this cycles model, which from the past, from why we could pick these cycles, seems to be the best cyclic model we can use now. This would give us a clear indication what to expect after October into beginning of next year. Okay, so that's the conclusion. I used a very long explanation of why using these two cycles and why this is a very tough interpretation of this cycle analysis. I don't want to excuse, but I hope you see that it's not always as clear to read cycles. So, and I try to educate you a little bit what you need to take into account, where you need to carefully look into. Otherwise, plotting this cycle model is easy. Yeah, so that's, I think, the purpose of this channel here. You can use different applications to pull up digital signal processing, doing whatever Fourier analysis, have a table about cycles. That's the easiest job in today's world of digital signal processing. 20 milliseconds. Here are the cycles. The key knowledge we need to improve on, and we can only do this in a collaborative way. There is not one single person who knows everything about it. That's why we have a foundation. And I try to explain you what's not the problem, but what's the situation with the spectrum, how to interpret the cycles. And that's the key topic for today, I think, which you at least should be the takeaway. And for sure, in addition, we have our daily cycles models here we can review. At least in October, we will get back to it. Okay, so that's the analysis on Bitcoin for today. I will now take some time. I see we have lots of questions in the live chat section. So let me review a little bit about your questions, and I want to bring up some of the important ones to discuss here as joint initiative. Maybe as I talked about the data or the historical point of view, Yeah, I think it goes back to 2010 where you have a Bitcoin data, but exactly, or 2011 where we have the first Bitcoin data available, trading at 0 point something. You could add this to the mix. Would be interesting to have a look at this data set. However, it would not change the overall cyclic structure, adding these 2 or 3 years. So we are missing, at least if we want to do weekly data series, we are missing 10 years of data, at least to get the weekly cycles more important. And from a daily model, it will not change the overall picture. So there might be 2 or 3 years. We have some data somewhere. I've not used it here. But as mentioned, for have reliable weekly cycles, we need at least 10, 20 years more for that. And in addition to that, Bitcoin, Ethereum are very volatile. Wouldn't a lower time frame be better for our chart? Yes. It's a good point, Alex, you're bringing up. So what you've seen here today is that skip the weekly. There's no clue from the weekly. We could start to use the daily. There are some important cycles. However, the spectrum is not as clear on the daily chart. So then that's exactly the next point to do. Go to the next lower time frame, which is 4 hour, 2 hour, maybe 1 hour or even lower. So use intraday data sets, and then you have more data. Maybe the spectrum gives you a clearer separation of cycles, and then you can more fine-tune the slower swings than just daily swings. Alex, that's exactly the next topic to do, and that I would encourage everyone to do. Just on this channel here, we won't discuss or at least sometimes I do, but we don't provide intraday data. So if you want to bring up intraday data, you need to upload 4 hour, 30-minute intraday data sets. I think it's easy to grab. So at least, yes, lower time frame would now be the next step to do if the daily isn't clear, as shown here today. So you're invited. Every member can do this with the cycle scanner. Donna, what does it mean when the cycles are not separated? Yeah, that's an important topic I mentioned several times in this session today. So let me try again to explain it in the spectrum. So the ideal cycle in the spectrum. Let me highlight it here. A clear separations means, and let's start here. If you have peaks which are sharp, go up and go down. So these peaks are very clearly separated. So separation means 1, 2, 3, because it's very strong amplitude. And to the left and to the right side of these peaks, there is no shoulder. So it's a clear peak here. And the shoulder is a long one. So it's not going here up to the next cycle. So that's, sorry, I'm maybe not the best in drawing this here on the chart. But that's when I'm talking about separation. And if you see closer at these 3 cycles here this shoulder is not going down as much as I would like it to go down. Yeah, so this is more a flat 2 peaks just in a very, very strong shoulder here. So however you want to interpret it, but they are not as clearly separated as an ideal picture would look like. So as again, the best would be that this would go down here to this, and then strongly go shooting up, then going down again, and then coming up here. If we would have seen this picture, then these 3 cycles would be more separated from each other than they are right now. I hope, Donna, it helps again to explain what it means. Sharp separation, or sharp peaks, however you call it. why do you need sharp peaks? Good follow-up question. Because we want the most prominent or dominant cycle which is most prominent in this data set. Because if we otherwise, from a mathematical point of view, it would be detected by digital signal processing. But if it's not as sharp, there could be cycles in between these two which are not separated as clearly. So maybe there are cycles in between which digital signal processing was not able to detect, and therefore it's just an averaging of the data series with an average cycle length. So, but it's, and if it's an average cycle length, it even might be not a valid cycle here. So it might be a composite out of 2 or 3 cycles, which seems to be one small peak in the spectrum, but it is not one peak, so it is a false cycle. I think I made a video on false cycles, and it's even something that Edward Dewey talked about. So if we don't have it clearly separated in the spectrum, it might be a false peak, which means mathematically the analysis or the routines used from digital signal processing identified it as a peak, as a cycle, but it's just the average out of 2 or 3 cycles which are more left, more right. So there's a shorter one, there is a longer one, and it's just the combination out of these 3, and it's just the average cycle out of these 3, which is showing as a small peak in the spectrum. And if you use it then for projection into the future, it won't be of any clue, because we needed to use the 3 composite cycles which have not been detected. It just shows as a small peak in the spectrum. So that's why it could lead us to wrong projections. So if we don't, other way around, if we don't use sharp peaks, our projection gets more and more unstable looking into the future. And I think that's what we're looking for. We want to pick the cycle which gives us the most valid outlook into the future. So I think thanks for your comment, Donna. So I think it helps a little bit, the explanation. And very important questions and very important topics I wanted to bring up. And thanks for asking back here on this topic, because that's really important for us all here. Another question which has come up here out of the audience. There are some pre-processing settings, fill in missing days. Which of the settings should be using here? Another good question. What I'm using here mainly is without any pre-processing. So we are using trading days for our analysis. For sure, you have trading holidays like today on the global stock market. So it's a trading holiday. So there will be a missing data point in this series. And that's the different to calendar days. Yeah. So and you have the option in the cycle analyzer to fill these gaps. So if you select fill in missing days, this results then in adding data points for stock market holidays, which gives you a more clear picture. Let's say if we talk about stock market from Monday to Friday, it would not make sense for the crypto because it's traded like Forex 24. So there's also a second option which allows you to fill in also the weekends, so that you always have calendar days, so always 7 days a week, 24 hours. There is not one single answer in which setting to use. What I would recommend is try both. So I always use the trading day as first raw indication, and then for crypto, I would recommend fill to switch to calendar days, so fill missing weekdays and also fill the weekends so that you get full calendar days. And then you get different lengths in trading days versus calendar days, but in regards to the projection, maybe the next low or top projection might be in the same point of time. So then from the using calendar days, you would, I think, identify maybe the same 2 or 3 dominant cycles. So I would assume the peaks in the spectrum would be more or less the same while reading different absolute values. So converting calendar days to trading days. And then if the projection using trading days and calendar days gives you the same conclusion in regards to the timing in the future, what we're looking for, then it's even more validating that you have cycles which you can follow. If you don't find the same cycle projection, not the same cycles, you will never find the same length, as trading days, calendar days different. But if you convert them and the projection looks the same, if it does not look the same, it's even more noise in the data series, which does not give us any clue detecting the cycle. So you can use this as a confirmation, use both settings to see if you come up with the same conclusions afterwards. Yeah, and maybe that's what I call noise. I'm just looking at digital signal processing. I'm just a cycles guy. I'm not interested in politics, market manipulation, however you call it, at least in the Forex, that's an important point. From digital signal processing, looking at that, it's just pure noise. This is not the real cycles underlying the asset class. However, if these noise gets so prominent, like politics regulating this asset class, this will overrule all important cycles in this market here. So therefore, too much noise, we can't trust digital signal processing. But that's maybe then a different discussion here, not directly. Or we need to bring in longer term cycles from my colleague Andy Pancoli, which is perfect in longer term political cycles. So that's then the power of the overall body of knowledge on cycle analysis. And that's so therefore always interesting. There's not just digital signal analysis, what we're discussing here on the channel every Monday. There are long-term political cycles which you can't identify with digital signal processing. So therefore, I hope you follow my other board members also here at the foundation. What I'm using here, so Lukash, when will the new user interface go live? What I'm using here on the channel is already the preview of the user interface we have already in beta, and you will also get updated. It's more convenient. We don't have a final release date on that, so when we see it stable, we will release it. So it's just in the testing situation to ensure it's really working stable. But I can give you an expectation. I would expect it latest in October. So I think latest in October, the new user interface with also some new features will show up here. So my estimate is October. And I think there's also, Sergey, I want to come up with this point. I think it's not about how cycles are plotted. So what we're using here is the theoretical way how you always plot cycles. However, I would not recommend to do it, but you can use, where are we here? There will be a new feature in the configuration panel once this new user interface gets live, which allows you, you see it here, to plot it as zigzag. I can give you a quick preview on that. Which is a zigzag cycles plot. So a zigzag cycles plot. I need to explain it here before doing this. It's just not using the theoretical plotting of cycles. It's not smoothing cycles. It's just two different ways of plotting cycles. But I think this will now take too much time to explain. But you see the new user interface will also have new features. This will be a separate session for sure. So October. Okay. Other questions which might relate. Maybe a final question here. Can you go over how we can extend the amount of data we put into the cycle model builder? Yes, that's the very important topic to understand and how to adjust it. And let me just quickly pull up to show you how this works in the data series. I will clean up everything here first. So the data series you use for your analysis is shown here in the lower left. Yeah, you see the in-sample period plotted at the bottom lower left end here, where my cursor is currently, with the in-sample start and end. You can also identify it at the dark blue color of the data set. And there are two icons in the model builder which are now important to change the period. So you can set the start point with anchoring this, so press this button and then hover over the point in time where you want to start your analysis. It's indicated then by this little dot here. You can also change the endpoint of the analysis. Let's take it here, which is the second dot here, and then press this refresh icon. So this is the important sequence, how to adjust it. And you can now see from the highlighted point of view, so the in-sample period has changed, the dark blue data has changed, and now this is the related data which is used to build the spectrum analysis here. So that's the way how you change the start and the end point. And if you want to load more data, so this data goes back to 2017, there is this icon range where you click on the range period, and you can then add +1 year, 3 years, 5 years, or the maximum amount of data. So if you click here, it will load up more data into the series if it's available. So this will not work every time. You might need to try different data series here, but you see here it here it goes back. And here I think this was also the initial question, saying we have data going back to 2010, and you see where it traded. Yeah, it's quite interesting to analyze this data set. So this data goes back to the year of 2010, Bitcoin trading at 0.0 something. What a dream from everyone starting investing in crypto at this point in time here. So you can, and what I would recommend if you have more time, start with a range. So set the start point to the first point of the data set here somewhere in 2017, and set the end point maybe after the first parabolic move ended. Press refresh, and now you have a cycle analysis just of this period here. And as said, but this is, I think it gets too lengthy now. We are just analyzing one parabolic move here. We can't do this with cycle analysis. So this is just pushing one parabolic data set into digital signal processing won't make any clue. But I think the question was a different one. Christian, I hope this showed you from the cycle scanner how you can extend the data, or how you can adjust which data should be used. Okay. So maybe just now really the final question, because it's related. We update so too much what you're using today. You can do the same with the current analyzer. So you don't need to wait. It's just the user interface which is different. The features which I'm using here are exactly the same which are available today. So it's not an amount of different features here. Features. So there's no update required. So otherwise, it should not be the case, at least, saying that. Okay, so we are running almost an hour now. I hope I picked a lot of questions to help you moving forward with cycle analysis. From my point of view, thank you for attending today. Having this large amount of attention really drives me. Being here again next Monday, same place, same time. Please do your analysis on crypto. Maybe take the recommendation, go down to the next lower time frame and do the same procedure as we're teaching here to analyze the lower time frame cycles. Thanks for joining me today. I hope we will see us together next week, Monday, same time, same place. Have a nice